Welcome back to Udomo. I have published a brand new AI model that predicts weekly stock price action movements. So, for example, we have Apple stock here. If I click execute prediction, it's going to run the AI model's results. Here we see the action that investors may want to take. The model predicts Apple will go up this week. So, here we see the historic AI model versus the buy and hold method. We see that the AI model turned 10,000 into 21,000 in this backtest, while the buy and hold method turned 10,000 into 19,000. So we have a alpha of $2,548. The directional accuracy of this model is 56%. So the goal of this AI model is to predict the direction of the stock every week. So here, the call to action is right above here. The model predicts Apple will go up this week. We can attempt to take advantage of this direction prediction either through a call option or through positions into the stock. And we see the AI model performance in this hypothetical backtest. Down below, we see bullish and bearish regimes. Here we see the AI model for the most of 2022 to 2024. It predicts bullish sentiment for Apple based on historic price action, volatility, and other data points. Next, we see this downtrend, and the AI model was able to pick up that, hey, sentiment has shifted in this stock, the price action has changed. So from 192 to 171, the AI model exited Apple stock in this backtest. So good trade there. And then from April 2024 to today, the AI model has been very bullish on Apple stock. We see the confusion matrix, the directional predictions that the AI model has taken versus what the actual weekly price action was. So, for example, the AI model predicted up 102 times, and the actual indeed was up 102 times. However, there are weeks where the AI model predicted, hey, Apple is going to go up. However, Apple actually went down. So that's how you read that confusion matrix. And then finally, the alpha sensitivity. So here you can see that there's a toggle. This basically enables users, investors to say, hey, I'm actually very conservative about Apple. So I'm going to slice this to the right. The right makes the AI model more conservative. So perhaps you want to decrease the amount of times that you're wrong and only hear from the model when it's very confident in its predictions. Or you might say, hey, I'm very bullish on Apple, so I want to get in every trade that I can. So this threshold is dynamic to your risk tolerance. And you can see that the model is performing optimally at 0.11 threshold. So that's why we have it tethered to 0.11. 0.11 threshold has returned the most in the backtest for Apple. So we can run this model against other stocks as well. So check out Tesla. I'm going to execute the prediction, and the model predicts Tesla will go down this week with a propensity score of 41% this week, and our threshold is 0.6. So the model has to return something greater than 0.6 for us to be bullish on Tesla. The AI model performance on Tesla backtest is pretty good. We see that the AI model turned $10,000 into $16,000, while a buy and hold strategy, you would actually be down on Tesla. You'd be down about $6,000 on this position. So we can see the AI model has outperformed Tesla, the underlying stock, 16,000 versus only 5,800 on an initial investment of 10,000. The regime performance, we have bullish and bearish regimes. Here we can see that the average bullish return was 10.5%, while the average bearish return was negative 9.6%. So we can see on average, the model is able to successfully pick up bullish and bearish times in Tesla stock. Up here, we also see directional accuracy. We see that the model is correct 59.9% of the time when it comes to the weekly direction of price action in Tesla stock. So we can feel pretty confident about the weekly price action movement in Tesla based on the AI model's predictions. So here we have data all the way up till February 8th. This is weekly data. So we see price action for every week. So week 8 represents February 1st through the 7th. So now we are predicting 9th through the 13th, February 2026. So here, when we say the model predicts Tesla will go down this week, it predicts that from February 9th to the 13th, the model says Tesla will be negative this week in a price action perspective. Here we can see the directional prediction accuracy on Tesla. So when the model predicted up, the actual up was 73 times. Predicted up while the actual was down happened 53 times. A direction predicted down while the actual was also down was 42 times. And then predicted down versus actual up was 24 times. And here we can also see the optimal alpha threshold for Tesla on this AI model is 0.6. So that's why the slicer's on that threshold. Of course, this is a AI model, and AI models can make mistakes. For example, if I used SPY to execute predictions on, we can see that the AI model actually lags in performance compared to a simple buy and hold strategy. We can see that the AI model benefits from volatile stocks like Tesla and Apple. These tech stocks can breed opportunity through volatility. We can see that the AI model is still good at finding times of bullish movement where we can perhaps use leverage to take advantage of these trades. Look at April back in 2025, Liberation Day and tariffs. The AI model in this backtest was actually bullish when the market was overall negative sentiment. So we can see these bullish trades that we could take advantage of given the AI model's predictions. We can see the directional accuracy for SPY is 50%. So there is no edge in this example. I want to show you this because of transparency. I want to ensure that you understand that these are AI models. They are not perfect. However, we can still glimpse some price action movement behaviors through these AI models. You can also look at other stocks like Delta. If I take the predictions from that, we see that the model predicts Delta will go down this week. And I can be more confident here because we actually see alpha generated from this AI model. The AI strategy generated $23,000, turned $10,000 into 23, an alpha of $2,200 compared to a buy and hold strategy, which turned $10,000 into $21,000 on Delta stock. So here, decent historic backtest for Delta. It actually exited Delta stock in February 2025 when the stock dropped. So good exit from there. We can also see the regimes, bullish and bearish regimes in this price action stock here as well. February 9th, we saw the stock go up to 68 and then dropped all the way down to 37. So good exit on the AI model there. We also see some good bullish movements. January 21st started out at 37, ended at 52. And then the AI model became bearish. We see in May 19th, the stock went from 52 down to 43. So we see some good trading happening with this AI model. Now, how can we use this AI model to our advantage? Since these are weeklies and my covered call strategy involves weekly covered calls, this AI model can help me decipher, hey, what's the probability of Delta or Amazon or Google going up this week? If the AI model is confident that Amazon will go up this week, perhaps I'd want to be a bit more conservative about the strike that I sell my short call at. If the AI model is bearish and is confident that the stock will go down, perhaps I can be a bit more lenient about the strike that I sell at. So this can help us decipher which covered call strikes we should sell our short calls for. This can help us generate more premium as we sell at a strike price closer to the current stock price. Now, the next question might be like, hey, back tests, that's great, but what about some actual weeks? Like, how did it perform? So let's check out what the model predicted last week and see how the week turned out. For example, we have Apple stock here, and when I execute prediction, it says Apple will go up. Last week, this prediction came true, up 7% last week. So good prediction for Apple. Next, we have Delta. If I click execute prediction, it says the model predicts Delta will go up this week. And if we go to the historic stock price, we see a 13% increase in the past 5 days. So great prediction on Delta as well. We can check Tesla execute prediction, and we see a prediction of a down week last week. And if we go see Tesla's price action, here it is, 2.4% in the red. We can look at the model's historic performance and see that the AI strategy would have returned 16,000 while the hold method would actually be in the red. You'd be only 6,000 on a 10,000 initial investment. You could look at bullish and bearish regimes where the green regimes are bullish, in the red are bearish, and you can see these ebbs and flows in the market that the AI model is able to pick up on. Brand new AI model on udomo.com. Check this out. I hope you find this AI model useful. How to review our covered call premiums from last week. Because of earnings, the premium on the short calls were inflated, and that was to our benefit. We generated $242 in premium last week thanks to Amazon Call, which was $144. I sold 2 of those that expired on the 6th, expired worthless. We've generated $144 in premium from that. Google, we saw a call for February 6th expiration. I sold that and then generated more premium with a 350 strike call. So 2 calls on that one. We also saw Chipotle had earnings as well. So the premium was inflated, $23 generated from that. And then Toast, unfortunately, Toast has degraded in stock price far from my initial entry point. So we only got to generate $2 from that. If you want to hear my thoughts on Toast, I have my original thesis video and a update before earnings. My short summary for that video is I'm going to hold the position. I think the fundamentals are going in the right direction. My main fear for Toast would be a degrading economic environment where people are spending less. However, we did see good Visa and MasterCard volume growth in their earnings. So we're seeing some mixed signals here and there. But I entered the position. It's not going my way initially. However, based on my thesis, fundamentals are going up while the stock price is down. I think it's worth to stay in the position. Going into this week, Toast has earnings on Thursday, so I might not sell any covered calls on that one. The strike prices are far from my original entry point, and I don't want to sell covered calls with a strike that's lower than my entry because I don't want to sell on a loss just in case. I will be selling covered calls on Amazon and Google, as those are my main positions that I believe in. And Chipotle, I'll try to sell a covered call on that one as well. We saw a very volatile reaction on Chipotle's earnings. However, the Chipotle stock's actually pretty flat. It dropped like 10% after earnings, but came right back up before the next day. So we benefited from the implied volatility. So that worked out for us. And I'm going to use my new AI model to try and help predict which strike prices I should sell at for these stocks. If you find the AI model useful, if you find the weekly price action direction movements helpful, make sure to like and subscribe to the channel and check out udomo.com for AI models, stock analysis tools to level up your financial analysis needs. Thank you for watching Udomo, and I will see you all in the next one.